One stock that is about to break out, in my opinion, it is a chip stock. They recently had earnings. The earnings reaction is relatively good. The stock is turning up, and the government also took a 10% stake in this company. This is Intel. They did that through the CHIPS Act. Notably, Intel is the one big semiconductor stock that OpenAI has not done a partnership with, not done a deal with. OpenAI has collaborated, done a deal to the tune of multi-billions, tens of billions of dollars with AMD now, with Broadcom, even with Walmart. So, of course, NVIDIA investing in OpenAI as well. You could say, why have they not done a deal with Intel? Well, I think even without an OpenAI pop, and given that the Broadcom stock pop was minimal on that OpenAI deal news, the OpenAI Midas touch might not be here forever, right? Intel looks like it's positioned well after recent earnings. The Mag 7 earnings are later in this week. If those go well, relatively well, Intel's in a great spot, and it's in a good buy spot. So it's not financial advice, but let's jump into what they've been up to.
This is Sam Putnam.
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 So this is the chart. So here's the earnings. You can see that pop on a pretty significant beat on earnings per share. Gave it mostly back the next day, which is notable given that the market was very green on that day. That was Friday, that Intel gave it back and the market went up. And now we're still above where we were before earnings. So it's good, but it's intriguing because it's not like buying, NVIDIA. It's hard to buy NVIDIA here after 4 green days, right? Even if you're very bullish and you see all-time highs as on the horizon. If you look at Intel, we don't have 4 green days in a row. We just have this little compressed day and then this bigger day. So after this big base. And this is a pretty safe base to play off of, given there's no major news that's likely to disrupt Intel. They're a chip manufacturer. We always be aware that Trump could say the T word and we could have a big move down, but we're well above that tariff scare, the most recent tariff scare, back into all-time highs. And as we can see, the earnings reaction, relatively positive. Was it an IBM type reaction? No. IBM selling off immediately on earnings, bouncing back, and then having a massive rebound. Was it a GM reaction, which is even better? No. GM having a positive reaction and then continuing on, along with CRS, but it definitely was not a Netflix type reaction. And in just a few days, we're going to see Amazon on Thursday, Apple on Thursday, Meta on Wednesday, Google on Wednesday, and Tesla just releasing earnings and having a reaction that is kind of in between that of IBM and that of Intel. Okay, an okay reaction. Did have higher revenue and now getting over a key level. So it's interesting when these stocks don't have huge reactions, because what it means is you actually get a chance to get in. It is great to have a perfect reaction like GM where you get it a couple of days to go sideways, but oftentimes what happens is when there's an awesome reaction, the stock just keeps going up a couple of days in a row. So if you don't see this on the right day, you're kind of cooked. That is not the case for Intel. Also not the case for Tesla, where you're getting a second chance to get position. So that's the chart. That's where the buyers and sellers, that's where the supply and demand is. And then as for the earnings, revenue did increase 3% year over year. So it's something. And then also net income positive compared to 17 billion loss year over year for Q3. So that's good as well. They also have this guidance, which is good for Q4. And that's good for revenue as well as guiding well for their earnings per share. So this 10% stake from the government, from the CHIPS Act, led to this move. This has been a massive move. Initially just 30%, and then really turned into a 60% move at this point, double that initial move off the headline. So definitely very bullish. The other company that comes to mind that had a big government investment is MP Materials. That $400 million investment from the Department of Energy pushed this stock up 100%, plus. Now, it's not completely fair to compare this to Intel because MP Materials is a new company and Intel has been around forever, but it was a change of character move for Intel, that piece of news. Huge volume, and once it gets over $50 a share, there's another level, and it's starting to look like this company could get back in the pack with its other semi names. This is the semiconductor ETF, which has just skyrocketed, led by NVIDIA. So Intel is definitely interesting long term. I think it's much safer to look at it just right here off of this level right after this earnings. Never want to buy before earnings. It's at a great spot. Earnings already happened. It is kind of extended from this line. This is the 200-day moving average. If you look at its peers, like AMD, this is what, 80% up? It's pretty extended. And NVIDIA up 30%, not so extended. And then the smaller companies, LRCX, 60%, AMAT, 20%, 30%. So Intel definitely on the higher end of being kind of overbought, at least if you're just looking at this one line. Now, the benefit of us actually looking at what this company has been up to, us looking at the earnings, us knowing, looking at this 10% government stake, is we can take all that information and we can say, yes, it is up a lot from this line, but we're not a computer algorithm, right? We know earnings just came out and the reaction was good. We know about this government stake. We know the reaction has been good from that. And so we can feel better about buying in at a price level, which is otherwise, if you just looked at the distance from this line, kind of overbought. So that's the balance that being fundamental gives. Of course, if you just are fundamental, I don't know that you would be looking at Intel at all because why would you want to invest in the laggard of the semi stocks? The one stock that OpenAI did not do a deal with. What does that say? Well, they do, obviously, they're always working on their chips. They do have a new chip called the Panther Lake chip, has higher performance and density which is another way to say power efficiency, which is basically the buzzword of the year. Every single chip company is jockeying to be power efficient and to not use so much energy, because if you need the equivalent of whatever it is, 20 nuclear power plants to provide enough computing power to make up for all of the demand from these LLM companies like ChatGPT, like Anthropic, well, maybe that's not super realistic to build all those power plants out and to get paid when those haven't even been built out. So better chip architectures are very, very sought after. So sure, OpenAI didn't do a partnership with Intel, but if we look at the other companies that OpenAI did do a partnership with, yes, there was a big move up for AMD. Even on NVIDIA, when they did that investment, there was a little move up. I don't remember exactly where that was, but maybe in here. Even by me just saying I don't remember and I can't tell on the chart, it kind of gives away how it wasn't a game-changing move for an NVIDIA. Of course, NVIDIA was paying them, investing in them. AVGO, the bounce was here, and that gave it back. And then Walmart was a big move up, but it's Walmart, right? It probably hasn't had a lot of other game-changing tech innovations. No shade on Walmart Labs, but started to give that back too. So Intel looks great, doesn't have that OpenAI connection, does have the government connection, which investors seem to love, makes sense, and pretty good reaction after earnings. So if you like these ideas, hit that like button. If you haven't hit that subscribe, hit that subscribe. And if you want to see the guarantee that I can offer, it's on stockscommunity.com. And if you have $25,000 to invest, and we can offer you, if you don't make $1,000 in stocks in 90 days, you get your money back. And you might say that seems far-fetched. It's not far-fetched to make just over 1% a month. Of course, you get your money back if you don't get to that 1%. So head over there, see if that's worth it for you. And if not, I will see you back here on YouTube.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.